Okay, we're going to get going. Since we're already running late. Good afternoon, everyone. I'd like to call the meeting of the Finance Committee to order, please. Doug, are there any public speakers? Oh, sorry. David.
Yes, sir. We have one public speaker today. Just a quick reminder that comments should be limited to 2 minutes. The one speaker is Murray Bowden. Mr. Bowden.
Murray, you're not tired of us yet?
I'm retiring.
Okay. You've been retiring for 20 years. Come on.
No, this one is serious because I'm getting older. We've sold our house in the Berkshires, and we're winding our lives down because I'm making mistakes. I can't remember, and it's embarrassing. And in fact, I've accomplished what I set out to do. I've given you the information, and I'll give you the proof of what needs to be done. And the implementation isn't mine, Larry. It's yours and the rest of you. This morning, the presentation about PTC, the young presenter said, it will not stop a train if there's a car in a railroad crossing. That is crucial right then. That's the whole ball game. My children have an app on their phone which tells them where each of their children are every minute of the day. And if one of those children is driving a car, it tells them how fast the car is going, the speed limit on the road that it's going. And the newest cars will tell you how hard you press the brake, whether you have your seatbelt on, and if there's a car behind you and you want to back up, it stops the car automatically. You have invested $1 billion in positive train control. Any autonomous app will do the same thing at reduced cost. It can be done in a month. Now, that's the truth. The emperor's new clothes, the emperor is naked, positive train control is useless. Everybody thinks it's okay, but it's not. Who has the intestinal fortitude to stand up and say, positive train control is useless? I say this having dealt...
Please conclude your remarks, Mr. Bowden.
I am. I've been in communication with people all across the United States. They all know positive train control is useless because you're all politically connected and you cannot speak up. Somebody has to figure out.
Mr. Bowden, please conclude. Thank you.
I am concluding. And you're talking about $1 billion and many lives? Isn't that worth a few minutes of your time? I've done my job. I've given you the information. It's your job to implement it.
Thank you.
Mr. Chairman, that concludes the public speakers.
Okay, next we have the approval of the January 22nd minutes. And may I please have a motion? Motion. Second? All those in favor?
Mr. Chairman, I have comments on the minutes. You know, we had a very robust discussion about the enhanced station initiative. And I know we're going to have another one on Thursday. But I would ask that I don't normally object to minutes, but the minutes have no reflection whatsoever about the issues that we raised, the issues we discussed. Doesn't even say we raised any issues. It just says Mr. Merdler asked a question about Package 4, and as you well know, and as the members of this committee know, we had a very, very extended discussion about the pros and cons of the ESI packages, and I would ask that the minutes reflect that conversation. That's what minutes are for, to reflect what we all say, and so I would move that the minutes be amended to include the very substantive comments that I and several of my colleagues raised.
Commissioner?
I would add to that, I'm confused why none of that debate was included, and then it doesn't mention that I also voted against them. So there's some inaccuracy to the minutes.
Well, we'll have those minutes revised. So with the proviso that the minutes will be revised to reflect the comments of members of the Finance Committee at the last meeting, do we have a motion to approve those minutes?
Well, I will move for the revised minutes, Mr. Chairman, but can the revised minutes be circulated and then revisited at the March meeting so we can all vote again?
I would ask if it's possible to have the revised minutes at the Thursday board meeting, if at all possible. And if
That would be
not,
fine.
If we can't have it there at that date, then certainly, in minimum 2 weeks prior to the next committee meeting.
That would be fine, Mr. Chairman. Thank you.
And also reflect Commissioner Trottenberg's no vote in the minutes. So with that on the record, do I have a motion to approve the revised minutes? Second? All those in favor? Nays? Thank you. Doug, I'm sorry. David.
The flu's got us all.
I'm used to saying Doug, right? David, can you take us through the work plan?
Yes, Mr. Chairman, there are no changes to the work plan, and the next item is Budget Watch, which is on page 2 of the exhibition book. This month's Budget Watch focuses on January operating results and the subsidy cash results through February. Budget Watch compares these preliminary results with the calendarized 2018 budget, which is included in the February financial plan that will be presented shortly by Bob Ferran. Starting with operating results for January, for the month, passenger revenues were favorable by $24 million, or 4.8%. Revenues at New York City Transit, the commuter railroads, and MTA Bus were lower, mostly due to adverse weather, particularly Winter Storm Grayson on January 4th. Toll revenues were favorable for the month, reflecting higher than anticipated traffic levels. Preliminary expenses were slightly unfavorable, preliminary reflecting high... I'm sorry, go ahead.
I'm reading it as unfavorable for January, unless I'm missing something. I'm on page 1 of the budget watch.
The fare box revenue numbers were unfavorable, but B&T was favorable.
Right. Fare box revenues were unfavorable by 24.
And B&T is favorable by 3.1. That's correct.
So the total is unfavorable by 20.9, unless I missed something.
You're absolutely right. Actually, going back, the passenger revenues, which is the fare box revenues, was $24 million unfavorable, 4.8%. And the toll revenues were favorable for the month.
Right.
That's correct.
That's what I thought I read.
Yes.
Okay, thank you.
No problem. Preliminary expenses were slightly unfavorable, primarily reflecting higher labor expenses, including overtime at New York City Transit, which were mostly offset by favorable results at the other agencies. Preliminary overtime expenses for the month were $14.4 million, or 19.8% unfavorable. Winter Storm Grayson impacted overtime spending throughout the MTA, but the main contributor of the overage was New York City Transit due to requirements to mitigate subway service delays and overcrowding and to provide vacancy absentee coverage. Debt service expenses for January were $217.5 million, which was $10.9 million, or 4.8% favorable to budget due to timing of debt service payments. Moving to subsidies through February, state dedicated taxes and real estate taxes were both slightly favorable through February. Overall, preliminary results early in 2018 have been somewhat unfavorable, with lower passenger revenues and higher New York City Transit overtime, mostly offset by lower expenses at the other agencies, favorable debt service, and slightly higher subsidies. It is much too early to draw conclusions from these results.
Is it?
Yes.
Excuse me, Mr. Chairman, can I ask a question?
Sure.
Is it the normal course that the first MTOA payment comes in May?
Yes, that's
That's been
standard.
the normal course over the years.
Yeah, what happened is years ago we spun up the final quarter for the state, our first quarter, into December,
Right.
and we've just kept that. So we received the MMTOA, a year of MMTOAs over 9 months. So
Okay.
this is exactly what's happened.
Been
for
the
a number
normal
of years.
course.
Yes.
Thank you.
If the PMT were to be, like as is proposed, paid directly to MTA without having to be appropriated, when would that start at its earliest?
Senator?
We've been in discussions with the state, and we haven't had a firm answer. We're expecting it to be later in the year.
Thanks.
Concluding Budget Watch, we next have Finance Watch. This can be found in Section 4 on page 22, and Pat McCoy will take us through it.
So the materials are in your deck. There's only one transaction I want to post you on, and that is the conclusion of the TBTA 2018A bonds. Those were bid out on February 1st. This was a $351 million transaction, and the winning bid was submitted by Bank of America Merrill Lynch. The all-in TIC was 3.84% on that, and we structured it with a long average life of 28 years. Lastly, just wanted to post you that we'll be sending out a solicitation for liquidity for our variable rate debt program. We've got about $2 billion of variable rate bonds that we'll need to remarket in the second half of the year. And so we'll be working to put our banks in place and then pivot to other variable rate alternatives for those bonds that we can't find banks for. So that concludes Finance Watch.
The next item on the agenda is MTA headquarters and all agency items. There are 3 action items. The first item is the MTA budget in 2018 to 2021 financial plan, revised per February financial plan, and Bob is here to present it. It's on page 14 of the exhibition book.
It's also on 34 in the Finance Committee book, and the actual February plan is presented in front of you. I'm going to go quickly through a slide presentation and just hit some highlights. First, the budget that was approved had year-end results as presented on the screen in front of you. $78 million projected of a cash balance at the end of this year, and then basically smaller cash balances through 19, a projected gap of $352 million in 2020, and $643 million in 2021. Now, there's several things that are embedded in that I think are pretty important. The first is what you've been hearing all year long about real estate revenues. We've been talking about the real estate revenues have been coming down, and it's primarily the real property transfer tax. That's the 1% tax we get on transactions that occur. It came in lower this year, and as we look at estimates going forward, we're projecting on average about $229 million lower than what we were projecting at this time last year. Okay, so that's reflected here. We've also reflected 4% fare and toll increases in 2019 and 2021, each annualized about $325. And again, I need to emphasize that's just for projection purposes. It's still subject to public hearings. It's still subject clearly to need and public hearings and board action. Also, we have annually recurring cost savings targets that are $214 million this year, going up to $418 million in 2021. So what's changed? You know, normally we don't come back for a budget approval at this time, but several things have changed significantly. State budget, city preliminary budget, and the subway action plan. So in the state 2018-29 executive budget, we're receiving greater TOA monies than we got last year, but it's less than what we had projected, about $61 million for this year. And we're seeing projections from the state, and we're seeing projections again from this kind of pot of different taxes that are lower because of economic activity. And it's about $135 million lower each year going forward. We do have the subway action plan that was funded or put into the state executive budget. The City of New York's budget did not have it in their preliminary budget. We've got debt service savings that came from the refunding transactions that we did in December, significant savings. So that's about $161 million over the plan period. B&T came in with a surplus that was about $27 million higher than we thought. We are using capital cash on hand to avoid selling debt. So it's about $1.7 billion, and that'll generate about $252 million of avoided debt service during the plan period. And then we're making other minor changes. We were asked to come up with a plan to fund or to implement a subway action plan based on the funding that we had. The board was very explicit that they didn't want us to get ahead of ourselves. And if you recall, one of the key elements of the subway action plan was increasing the headcount to do more work. Well, basically what we're doing with the revenues that we think we will be receiving as embedded in the current executive budget is we're phasing in the subway action plan. And basically, we're delaying the hire of some employees. We probably already have added about 1,000 employees, doing work in this area, but we're delaying further hires until we see whether additional revenues come in. So the plan that was presented, that we are embedding into this, is presented on slide 5. And you can see operating expenses going down from what was originally projected during this kind of jumpstart period of 508 to about 256. Capital cost going down, and basically we're just delaying the car conversion. On the next slide, you can see some of the highlights of the program. And again, significant good things are happening in this plan. In summary, where are we? Well, this budget has embedded kind of break-even cash flows in 2018 and 2019, a little bit higher deficit in 2020, and about the same deficit in 2021. But what this really shows you is we need additional annual revenues coming in, or else we need the state and the city to accelerate the funding, issuance of debt in the 20 and 21 period, the end of our capital program going into the next, so that we can avoid selling debt ourselves. So that's really the options in front. Either additional revenues or the state and the city step forward and accelerate their issuance of debt so that we can delay ours. Now, I'll answer any questions, but then I can go to the recommendation. Yeah.
On the new estimate of the $229 million average annual decline in real estate transfer taxes, is that a change? Is that 229? I'm a little unclear. Is that 229 off of the estimate in the approved budget?
Yes.
So that's a huge, considerable amount that we're not.
Oh, I'm sorry. No, that was from the November plan.
Yeah, that was in the November financial plan.
So to what extent is it the same as the estimate in the approved 2018 budget?
Yeah. What I was saying is the reason that we have these large deficits in the approved budget, as opposed to what we had the year before, is for that reason. Okay?
Yeah. So just to be, so I'm clear, the $229 million annual decline is what was incorporated in what we had already approved.
Yes, that's why we had those out-year deficits in 20. Because again, if you look back over history, we didn't have such sizable deficits in prior budgets. But that's changed since, a year ago. The changes this time, it's the MMTOA. That's the big change there. So that's just a reduction of the MMTOA going forward based on lower economic activity.
And that's a decline of how much?
That's about $135 million annually.
So if the legislature approved, say, this session and could be implemented in this session of the legislature, a tax on vehicles for hire, as has been proposed, and that revenue came to the MTA, would that more than compensate for our current shortfall?
Well, I think it depends on what you want to talk about the current shortfall. Because again, remember, our capital program goes 15 to 19. We're going to have a 20 to 24 capital program too. But basically, we would need anywhere from, $400 to $600 million of additional revenues to kind of keep us going if we are going to have to keep issuing the debt.
Well, my assumption is that if that tax was implemented, it would go to operating revenue, wouldn't it?
Well, remember that operating can be used to pay debt service. So, in a sense, we treat debt service as part of our operating budget. But I think the numbers, in the Fix New York, they gave us a range on what it would be for higher vehicles. And I think 425, was the top end of that range, depending on time of service and who's covered. But that would certainly help if we get that.
I mean, there does,
support.
I don't know, obviously, we don't know what the legislature is going to do, but there does appear to be a consensus that a tax on, significant tax on vehicles for hire is appropriate.
Again, we typically say we're agnostic about what the revenue is. However, it would seem that anything that might help to relieve congestion in Midtown would have a lot of benefits for the MTA, for our bus service, and for all of our customers. So that public policy aspect of that, I think, is very attractive. But we need revenues, and we'll take them.
I wasn't even focused. I agree on the public policy aspects of it, but it would also be a big revenue producer, wouldn't it?
From the projections, it looks that way.
Thank you.
Let me have Commissioner Zucker go first.
Thank you, sir. This may be a slightly technical question, Bob. Just help me on this first part about, excuse me, we're using $1.7 billion of capital cash balances. So are we mixing capital and operating here? And if so, just give me a little bit on that, please.
We spend about $5 billion. We spend about $5 billion a year on capital, okay, our capital. Right now we have about $2.5 billion of capital in our accounts, capital dollars. And that's primarily pay-as-you-go funds, that's insurance proceeds that we've received, as you know, that's other things, settlements that come in, additional funds that have come in from Hudson Yards. So we have that. So about a half year of cash for capital that we have on hand. Interest rates have been so low that we have, and I'm getting there, interest rates have been so low that we wanted to sell debt and lock in those low rates. Right now, with the pressure on our operating budget, we can spend down those capital dollars and then avoid having to sell the debt.
I totally understand your point about not having to sell the debt. I'm trying to understand what the dollars are from. They're not from, it's not from previous debt issuance that you have the cash sitting around.
No.
This is from other sources, not from debt. But it was earmarked for capital uses otherwise?
Yes.
But we're not obliged to use them for capital.
Well, we programmed them. It's in our capital program.
Well, that's okay. So let's talk a bit about that. So if we're repurposing capital dollars for operating,
No.
you just said it's programmed for.
It's programmed in. Remember our capital program. We use debt. We have pay-as-you-go. We have settlements. We have sale of assets. This is non-debt capital dollars that we've accumulated. We could have spent those dollars first and then sold bonds for the balance, but we've been selling bonds and spending those dollars first. And so what I'm saying is this makes sense right now for me to say let's spend that money and avoid or delay selling bonds, and that gives us relief on our financial plan.
Just going forward, the adjective in front of cash, calling it capital cash, is what caught my eye.
Okay.
It's cash.
Yes, this is money in the bank.
Right. Okay.
Not operating funds in the bank. This is
understood.
Money earmarked for capital.
Got it.
Commissioner Paley?
Going back to the operating discussion, the $450 million that Carl is hopeful the legislature will do, and many of us agree, while that will compensate us for the some of the shortfalls in the real estate tax and MMTOA proposals, I believe it would not have any impact on the proposed 2019 fare increase.
That's right.
So that is not enough money to alleviate any portion of that fare increase.
Right. If we, as I mentioned, the proposed fare and toll increase annualizes out to $325 million. So if one wanted to substitute another revenue stream for a fare and toll increase, we'd have to come up with $325 out of the box, and then you'd still see the same out-year deficits that we're projecting here. So,
right. No, I mean you see the 2021, because what you've done is basically substitute one source of money in 19 for another source of money in 19. Correct? My point is if we add to the for-hire vehicle amount tax, and instead of collecting $450 million, we collect $800 million. I'm just picking a number. That would cover or could cover the proposed 2019 fare increase, because 350 is 350. That would not do anything to 2020 or 2021. However, it would eliminate the need for the 2019 fare increase.
Yes. Dollars are fungible in that regard.
Right, and then we'd have the same conversation for 2021, but we wouldn't have to have it until 2021.
Yeah. That's absolutely right.
Okay.
So the point I did want to just make sure everybody understood is when we show these out-year projections, out-year gaps,
right,
we've assumed those fare and toll increases. So if one wants to avoid them, it just means the revenue raise need is greater.
Right, understand.
Significantly greater.
Understand. But that is an option.
Yeah. Yes. And I'd have to say, too, that's why these savings targets that we're trying to achieve are so critical, because we're assuming that we can hit $214 million of savings this year and increase it on an annually recurring basis to $418 million in 2021. If we don't achieve those, the gap's bigger, the revenue need is going to be greater.
I realize that we're only 6 weeks into the new year, but do you remain optimistic that we'll achieve those savings targets?
We've got a number of things targeted, identified, and we're going to push as hard as we can. You may know we have restricted hiring. We're really reviewing all new hires. If it's not critical, if it's not essential, if it's not safety or security related, we're vetting every single hire. We're cutting back on travel. We're cutting back on programs that our employees, participate in. So we're really looking at expenses.
Bob, maybe we can have quarterly updates on how we're tracking on the savings plan. So this way we'll be able to monitor it, not wait till the end of the year to find out. Okay. Any other questions? Can I have a motion?
Well, let me just read real quickly. So the recommendation is the end of the staff summary, and I'll quickly say to adopt the 2018 final proposed budget and four-year financial plan, and include in the staff summary the projection of the 2019 and 2021 fare and toll increase will require separate board action in advance if they were to occur. To reauthorize staff under the guidance and direction of the chairman, managing director, and chief financial officer or their designees to take actions to implement the policy actions set forth in the plan. To authorize staff to carry out the phased-in SAP. To authorize staff to carry out all actions, including budget and cash management, that were included within the recommendation section of the December staff summary, but excluding those to the SAP reductions that had already been taken care of, no longer applicable. Authorize staff to expand the SAP should additional funding become available. That's it.
Second? Have a second? Second. All those in favor? Opposed? Thank you.
The next item is the 2017 TBTA operating surplus, which seeks approval of resolutions which will certify and transfer $740,143,952 of its operating surplus to the MTA and New York City Transit, transfer $1,476,772, representing 2017 investment income to the MTA, deduct from operating revenues of the TBTA for its fiscal year ending December 31, 2018, the amount of $27,960,932, which amount shall be paid into the necessary reconstruction reserve and advance the 2018 TBTA surplus.
Questions? Motion? Second? All those in favor? Nay?
The third item is the mortgage recording tax escalation payments to Dutchess, Orange, and Rockland counties. It is recommended that the board authorize escalator payments totaling $4,390,421.59 to Dutchess, Orange, and Rockland counties from available funds on deposit in the MRT2 corporate transportation account.
Questions?
These are done because the state law of the state of New York requires it. It's not discretionary on our part.
Correct.
We're required to do so.
Right. It's what we call the DORF fund.
Right. Just want to make sure everybody understands.
We didn't do it to piss you off, man. Can we have a motion? Second? All those in favor? Nays?
Next, we have David Ross with procurements for headquarters and the agencies.
Thank you. So first, for headquarters, there are 27 procurements for a grand total of $137,080,852. There are 20 competitive procurements for personal service contracts and modifications for a total of $96,080,017. I note there are two corrections I have to make. One is there was a printing error. Item 20 refers to a staff summary in the book. It's not there. So that will be added for Director's Desk. It's for an extension for the bus customer information system. It's an existing contract that we're extending for a couple of years, and so that we can more coincide a new procurement with the new fare payment systems being purchased. So like I said, that'll be added to Director's Desk. There's also an error in the staff summary for the Greystone item, number 16. It refers to there being 11,000 station affecting accounts. There are 1,100 station affecting accounts. So that was an error in the staff summary itself for the Greystone item number 16.
Questions? Can I have a motion? Second? All those in favor? Nays? Okay.
So there are 7 New York City Transit procurement actions for ratification pursuant to Executive Order 168 and its extensions for a total of $41,835.
Any questions? Motion? Second? All those in favor? Nays?
Next on the agenda, we have Metro North Long Island Railroad. There's one action for Long Island Railroad, and it's an amendment to the Gateway Tunnel Agreement with Amtrak.
Questions? Motion? Second? All those in favor? Nays?
For Metro North Railroad, there's one sole source procurement for a total of $4,625,000. We also have one competitive procurement for modification to an existing agreement for the sum total of $1,207,105.
Questions? Motion? Second? All those in favor? Nays?
Long Island Railroad has one sole source procurement for a total amount of $249,025.05.
Questions? Motion? Second? All those in favor? Nays?
And for New York City Transit MTA Bus, we have one competitive RFP procurement for $49,338,169.
Questions? Motion? Second, please. All those in favor? Nays?
For Bridges and Tunnels, there are two modifications to existing agreements for a total of $74,711,502.
Any questions? Motion? Can I have a motion? Second, please. All those in favor? Nays?
There are no items for FEMTAC. This concludes procurements. Now to David Keller.
The MTA consolidated financial and operational reports can be found on pages 96 to 149. Next is David Florio with Real Estate.
We have one action item, Long Island Railroad, an agreement with the Klein family to support a portion of the East Rockaway platform at the East Rockaway station.
I'm sorry, could you repeat that? I'm sitting right next to you.
It's it's a lease agreement with the Klein family. It's a portion of land that supports the portion of the platform at the East Rockaway station. Sorry about that.
Any questions? Can I have a motion, please? Second? All those in favor? Nays? We need a motion for the Finance Committee to adjourn.
So moved.
Second? All those in favor? Aye. Thank you. We are adjourned.
I love getting things at the 11th hour. I just love this, burning through it.